I think that there's a place for these programs, and I think it can make it in a market where we don't accept contingent offers very easily or very often. I think this is the solution. This is the workaround for that scenario. And it costs you a little bit more money, but if you can time the market a little bit, you might be able to absorb some of that extra cost. So
Well,
might be able to offset it with a higher sales price. So.
Yeah, especially right now.
So they base their fee on the actual sales price of the departing resident. So, and it's 2.4%. So although they're not charging for the bridge loan specifically, they're charging you a flat fee of 2.4% for that 90 days. But you're able to use the equity in your existing home to move forward and buy a new residence and not have to sell first to purchase. So you are using the equity to facilitate a single move. No money has to come out of your pocket if you have enough equity to cover your down payment and your closing costs. You have the flexibility when you've got a 90-day window. 90 days is not as big a window as I'd like, but it certainly could be adequate. But it certainly would give you some time in there where maybe you could do some exterior painting or some exterior maintenance with a 90-day window.
No. And some of these lenders, like the one we're talking about right now, goes for the 90-day window. The other lenders we were talking about, American Heritage, 12-month window.
Yeah.
So that would be more of a Howard liking.
Yes.
More elbow room to list the house, right?
Yes. And the thing of it is too about a 12-month window is that if you did have some, bigger chores to attempt to repair, or you wanted to do some of the work yourself and it was going to take you a couple months to get it painted, or it does give you that time to do that. Now it's going to cost you money. So let's not pretend it's free. So you still do have the mortgage on the original residence, right? And then you're going to be paying for the loan, for a while you have that loan out. So, but it does give you more flexibility to handle the things on the existing residence how you would like to handle it. So if you want to do some of the work yourself, you certainly can. Yes. The risk is, you guys, this is the risk. So you need to be working with a really good real estate broker during this process, because we're going to take a look at the home that you're leaving, the current residence, and we're going to give you a market analysis on that. And we need to be very, very realistic as to what you would potentially get for that residence when you are going to go to sell it. So we need to be on the conservative side. And so that when you get your net proceeds and you're putting the money down on the new house, that you don't wind up short on cash. So we do need to be very, very diligent about that. You need to be working with a good professional that give you good guidance on how much that home will be worth on the conservative side.
If I could make a suggestion for that real estate professional, I would suggest Pat Howard. That would be my suggestion.
Thank you, Dan. That's very kind of you. Yes, I'm available. Yes, guys, pick me. I love working with buyers and sellers, as you might imagine, and investors and builders. I don't want to leave them out because they are also a huge part of my business. So